Hi everyone, welcome back. You're watching Market Fatafat on ET Now, the countdown of the movers and shakers. But before we start that countdown, Mahindra today launched its new e-vehicle based fleet platform Glyd for commuters in Mumbai. M&M has in fact partnered with players like Meru, Vodafone and even Cisco for the project. ET Now's Utkarsh Chaturvedi caught up with M&M's MD Pawan Goenka to speak about the project as well as EVs. Listen in.
No, I won't want to say that. We are not taking on anyone. What we are trying to do is start something new for office commute primarily and give a differentiated experience. So it's not about fleet operator versus us. In fact, what we want to do is demonstrate that electric vehicle can be used for shared mobility in a very convenient and commercially viable manner and hope that many more people do it. So it's not about competing, it's about demonstrating.
We have a lot of partners in here. Can we speak about the whole process which went through to really build this and what was the idea behind it?
Well, the idea behind it is twofold. One is to sort of test out shared mobility, and I think in today's world, auto OEMs cannot afford to be sitting on the sidelines when it comes to shared mobility. And second, demonstrate that electric vehicles can be used in a very convenient manner for shared mobility, and also in some ways demonstrate that a shared commute does not have to be uncomfortable, boring, unpredictable, and therefore we have taken e-Verito and sort of customized it for 3 people commuting in it, yet each person kind of seeing it as his own vehicle, his or her own space. So there are some small innovations that we have done, and I hope that will provide the differentiation that we are hoping for, that we will see in office commute.
How many partners do we have?
We are partnering with Cisco, we are partnering with Vodafone, we are partnering with Meru. Meru is doing the running of the fleet, Vodafone has provided connectivity, and Cisco has given us the platform.
It's 7 which we flagged off today. How many is what you are thinking of?
Sky's the limit. We'd like to see 1,000, 2,000, 10,000 someday, but it's a small step, as I said. I think it all depends on how the commute is seen as differentiated from what they can get. There are many other options available today, and if you're able to create that differentiation, then I think more and more consumers will want to take this option. This is point A to point B, from home to office and back to home, and I hope that many more would like what we are offering here. It is, I think, as far as I can make out, something unique that nobody is doing right now, and hope we can differentiate.
We are speaking about electric vehicle, and I cannot not ask you. We are in middle of the last 1 or 2 cabinet meetings, and the FAME 2 announcement is still awaited. Is there any clarity which you people have from the government? When will FAME 2 come, or whether FAME 1 will be extended or not?
We don't know. The last cabinet meeting, I think, before the elections are declared is this week. And I hope that this is on the agenda this week, because it's very important that we have continuity between FAME 1 and FAME 2. So if for some reason FAME 2 does not come before 31st March, I hope FAME 1 does get extended beyond 31st March. But continuity is what we're looking for.
And is there a fear that if it does not come this week, then we have 3-4 months of election and then the new government coming to power? Will that really deter the whole process, at least, I won't say for a long term, but for a short term?
Well, let me put it this way, that Government of India is very well aware of the importance of continuity for electric vehicle incentivization. And I'm sure that that what you are talking about will not happen. Either FAME 1 will continue or FAME 2 will come in time.
All right, that of course was Pawan Goenka talking exclusively to my colleague Utkarsh Chaturvedi, talking about of course the shared mobility space and the commercial viability of e-vehicles in the fleet space. Well, this is a show where we, of course, get you a countdown of the top movers and shakers. So let's do that first by introducing everybody who's joining us on the show. Soumya Sharma, Siddharth Bhamre, Kunal Bothra on the technicals, and along with him is also Sameet Chavan from Angel Broking. So thanks to all of you for joining in, and let's start off first with stock number 1, Adani Ports. Soumya, take a look at the way the stock has cracked post that acquisition. What's the reason for this downfall?
Well, Movina, talking about this acquisition of agri-logistics arm of Adani Enterprises for 16,062 crore rupees. This acquisition expected to be completed in March. Even though the stock is trading in red, the brokerages remain bullish on the stock. Well, talking about the CLSA on Adani Ports, they said that the acquisition has a premium valuation and is an agricultural logistics, particularly a high-growth, underpenetrated business. So it's maintaining a stance of buy with a target price of 475 rupees. At the same time, JP Morgan is also bullish on the stock, maintaining an overweight stance with a target price of 430 per share.
All right, Kunal, let's talk about SRF. You know, we've seen quite an uptick come by in this stock price off late from levels of 1900 now to 2300. What do you make of this move?
Last 1 week, the stock has been more sideways, in the process of being sideways from the levels which you mentioned, 1900 to 2200, 2300 odd. The stock has now formed a bullish flag pattern, and it's heading towards a breakout of this mild consolidation as well. So I believe SRF could be coming back into that spring of momentum. I would suggest a hold with a revised target of at least 2350 to 2400 range.
All right, another stock that's seeing an uptick today is ICICI Prudential, approximately 3% of a rise. Samit, what is your strategy here?
See, Mobina, this stock is showing some kind of strength. We are seeing good traction in this counter after recent underperformance. In this process, the stock has managed to surpass its recent swing high of 315, 318. So, looking at it, over price and volume activity, we expect continuation of this relief rally. So, next level to watch out for would be around 340. So, we expect continuation of this move at least towards 340. And on the lower side now, previous resistance of 315 would act as a very strong support zone.
Okay, so that's the view on an ICICI Prudential. Next up, Reliance Infra certainly is a big news maker. This is after the ET has reported that CDPQ, or the Canadian Pension Fund Manager, along with PSP Investments, as well as Italian toll road operator Atlantia, are in the race to buy Rel Infra's Delhi-Agra toll road, which has an estimated value of approximately 4,000 crore rupees as per sources to ET. Reliance Infra, remember, does operate that 6-lane road that connects Delhi and Agra on NH2, and it has any which way been in this asset disposal mode naturally to bring down that humongous debt on the books. The Mumbai power business, the cement business, all of that had been sold, and the debt has dropped 65% to 7,000 crore rupees. So a deal for the toll road would mean this dropping to less than 5,000 crore rupees. So certainly will do well for Rel Infra. For now, the stock price is just about lower by 0.9%. So nothing great seen over there. Praj Industries, Kunal, meantime, along with the rest of the sugar space, this one too saw that move coming in, and today as well it's higher by 2.8%.
Absolutely, Mobina. So, like the sugar stocks have been doing pretty well. Praj Industries has also made a very good comeback from that big correction from 150 to 110, 115 levels. But now I think it's moving through a steady uptrend. It's broken a swing, resistance pattern, and I believe that should indicate that the stock can head up higher from current levels as well. 153 to 155 could be a target range for Praj Industries. Would suggest a buy at current levels with a stop loss at 142.
Right. Meantime, take a look at the way Motherson Sumi is moving higher today in trade. This is, of course, after both the US as well as China has indicated that there is significant progress in the talks. Trump is, in fact, even considering deferring the tariff hike. There is a possibility that the Chinese premier may meet Trump in his Florida hotel. All of this is something that certainly has boosted the bulls when it comes to the trade talks. And Motherson Sumi, of course, with its great exposure to international markets, has gone up higher, not just today, but for the last 5 trading sessions. We have seen green on the screen. It's in fact at 157 now, testing its 100 DMA. Samit, let's talk about Reliance Communication. Your view here?
See, clearly this stock has been a laggard. The correction started way back in 2008. So it's been nearly 10 years now. The stock has not at all made money for investors. And recently also we saw a strong bout of selling in this counter. It's been now consolidating since last couple of weeks, but we would avoid buying into this such kind of counter. In fact, any decent bounce back from current level would be an exit opportunity.
All right, so that's RCOM for you today. Definitely an avoid. So, Amir, let's talk about Jet Airways. There seems to be some news over here, especially with respect to one of its lenders.
Well, yes, Mobina, the stock has been under pressure on back of the reports, and that SBI, its largest lender, is mulling insolvency route via NCLT to recover loans, the Jet Airways loans. Subsequently, appropriate interim credit facilities would be sanctioned to the airline by the lender. So this is what we're gathering from the reports and what's going on. So the stock down by over 3%.
All right, 230 rupees is where Jet Airways is trading at. Kunal, let's talk about HDFC today. It's one of the big losers in the Nifty 50. What's your view here?
So the streak of underperformance continues for HDFC, Mobina, and this is surprising because at a time when you're talking of the index trying to break its 200 moving average, trade at resistance points, HDFC on the other hand is trading below its 200 moving average, so it's unable to break that key moving average. And in the meantime, this continued weakness is one of the reasons why the Nifty is also struggling and being at least on a flattish note. So I believe HDFC could be seeing some bit of more weakness. 1800 to 1840 could be a near-term target range for the stock price.
All right, so that's HDFC for you. 1875 is where it's currently trading at, and of course Kunal did flag off those levels. Take a look at meantime Mindtree. Today it's higher by approximately 1%. This after reports have suggested that KKR is offering 3,100 crore rupees to purchase VG Siddhartha, who's the promoter of course of the IT major, his stake in Mindtree. This offer makes KKR the highest bidder for the 20.5-ish odd % stake held by Siddhartha and his two firms in Mindtree. Remember, KKR's latest offer is not only higher than what it had proposed to pay earlier, but the private equity firm also more or less softens its original terms to gain sole control of Mindtree. So in this race, naturally, we are seeing the stock price going higher. 911 rupees, precisely speaking, is where it is currently trading at. Okay, meantime, more highlights from the Global Business Summit. Deloitte Global CEO Puneet Renjen was at the big summit and shared his sense of the world of business and economics. He says he believes the digital revolution will be more profound than any other revolution, and companies will have to start thinking beyond profits. Listen in.
Things are changing and changing rapidly. The Yes Bank speaker, I completely agree with him. The Industry 4.0 revolution is fundamentally changing everything that we know. It is the confluence of the digital and the physical world. It's enabled by technology and new business models. And so it is fundamentally changing everything. And not to age myself, but I believe that this revolution is going to be more profound than the ERP revolution that I lived through, the Y2K revolution, the re-engineering revolution. The potential to disrupt, the potential for opportunities in Industry 4.0 is profound.
All right, welcome back. Let's continue with the countdown then. And Kaveri Seeds, this is a stock certainly that has seen a lot of pricing action off late, going deeper and deeper in the red. Samit, would you advise traders to hold on or investors to hold on here or an exit?
No, clearly in last couple of weeks the stock has corrected substantially, ever since it broke its major support level of 560. Since then there has been no respite, so the trend remains bearish, and it's like catching a falling knife. So I don't want traders to get into this counter. Don't try to make any kind of bottom fishing in such kind of falling stocks. So it's better to stay on the sidelines. Once this stock gives a decent bounce back, in fact it should be treated as an exit opportunity.
Okay, so trend is bearish, no point catching a falling knife. For now, just stay away. Kunal, you flagged off UPL, and yes, the stock is at a multi-month high. So you believe there's more room for the rally?
Like Mubina, because the stock is at a multi-month high. It's almost at a 2-year high, if I'm not wrong. As well as look at the momentum in the recent charts. The stock has been gaining steady momentum. It's just that in the last couple of days you've seen more price action, the stock getting highlighted in terms of price performance, but it's been doing pretty well since last couple of weeks and months as well. So net I believe that this trend should continue for UPL, and I believe the stock could be held on for further upside. Short term wise, I think 860 to 870 could be the next targets for UPL.
All right, Samit, let's talk about Kajaria Ceramics. With the in light of the entire GST bit and in light of the impetus given to housing, perhaps today we are seeing an indirect, impact come in on Kajaria Ceramics stock price. What would you advise here?
Since the October low, this stock has given decent recovery, and now since last 3 weeks it's been consolidating. So overall it's in a consolidation mode, but looking at last 3-4 days price action, it appears that the stock is now marching towards its higher end, so that is in the zone of 550 to 560. So the stock is likely to head toward that, but in order to trigger further strength in this particular counter, it has to surpass 560 on a sustainable basis. So till then it is likely to consolidate on the lower side. 520, 510 would act as a very strong support.
Okay, so that's a strategy Sameet is recommending on Kajaria Ceramics. Kunal, why are you flagging off Shriram Transport?
So, at a time when the markets are sort of a bit wary on NBFC sector overall or HFCs, I believe Shriram Transport is on the verge of forming a double bottom pattern. Now these are typically very strong patterns. They also indicate that a strong bottom formation process has already gone through into that particular stock. Shriram Transport is exhibiting very similar kind of a patterns. 1100 plus is the breakout level, so I believe a trader could buy above those 1100 mark. I think you can expect another 4 to 5% upside on a quick basis for Shriram Transport above those 1100 mark.
Alright, so that's Shriram Transport. Kunal is advising a buy. Sameet, we just flagged off the reason why Motherson Sumi was moving, and it perhaps has to do with the fact that we are seeing this company have global exposure, so US-China trade talks would bode well. But on the technicals, what would you recommend to viewers?
See, as far as Motherson Sumi is concerned, this stock has been undergoing some kind of correction phase in last 3 months. However, last couple of days have been so good for this counter. It appears that the stock has formed a strong base around its monthly support level of 125, 130, and in last 2 days we have already seen good bump up in this counter. And if I just look at the volume activity as well, it has risen substantially. So looking at this, I would expect this relief rally to extend. From here on, 165, 167 is clearly on cards.
Alright, gentlemen, on that note, thanks so much for joining in on Market Fatafat and giving us your technical strategy. Sameet and Kunal, both of you, thanks so much. Okay, but just before we wrap it up, aviation sector fundamentals intact despite a sector slowdown. That's the word coming in from SpiceJet's chairman Ajay Singh. Speaking at the sidelines of the Economic Times Global Business Summit, Ajay Singh says that fuel-efficient aircraft will help SpiceJet post better profits going forward. Listen in.
I think temporarily it has. The aviation sector has probably done better in terms of yield and in terms of cost in the last 2 months, in January and February. Of course, we need to see what the impact of the recent oil price increase is in March. The fundamentals for Indian aviation remain very strong. The underlying demand is extremely strong. What we need to do is to ensure that the high taxation and other costs that are being imposed on Indian aviation, they come down. And if that can happen, we will have a far more sustainable aviation sector. I think what has also helped matters in the last few months is that there hasn't been a huge capacity expansion. And, over this year, hopefully, that the capacity expansion will be modest. And if that can happen, we hope that yields can increase and the sector can be more viable.
But the KEPA recently warned the sector that the competition is not in line with the demand in terms of growth. So what's your outlook on that? What's your take on it? Do you agree that Indian competition needs to take it easy and go easy on concessions and special packages during the festival season and all that?
On average, the yield improves when clearly when the demand outstrips the supply. What has been happening in India is that there has been a lot of supply from certain carriers, and those flights have been put on the same airports, that there have been other flights. So instead of now having 40 or 50 flights a day between two city pairs, now you have 70 or 80 flights, and that's what depresses yield. I think over this year, if the supply is somewhat limited and demand continues to grow the way it has been growing, then yields will improve. So it's not a question of some promotions during festival season and otherwise. Inherently, this is a question of supply, and if